You must have seen headlines like this, and this in your feeds in the past couple of days. So, what's all the ruckus about? Earlier this month, the hedge fund Elliot Management warned its clients against Nvidia, one of the largest chip-making manufacturers in the world, claiming that it's in bubble land. The private letter to investors leaked by Financial Times claimed that the AI-fueled boom in Nvidia's stock value is in fact overrated. Nvidia's shares took a brief dip afterwards when Elliot Management took out $4.5 million from Nvidia. Owing to its GPUs that are crucial for generative AI training, Nvidia's revenues have quadrupled in the first quarter of 2024. A similar upsurge in AI-related stocks has been observed since the launch of ChatGPT in November 2022. And the pool is only going to get bigger. According to the latest stats by Markets and Markets, the AI market size is expected to cross $400 billion by 2027, with the global tech industry set to expand around $1 trillion in building generative AI in the coming years. As the Gen AI hype reached its peak in June this year, according to the Gartner hype cycle, market experts have started sounding alarm bells. Several Wall Street analysts and investors are voicing concerns about the amount of money being poured into AI-powered technology, claiming that a dot-com style bubble might be in the offing. A report by investment bank Goldman Sachs found that AI adoption remains muted on average across industries. This prompted the head of equity research at Goldman Sachs, Jim Cavallo, to remark that despite its expensive price tag, the AI technology is nowhere near where it needs to be in order to be useful. This begs the question, is AI indeed a bubble? And more importantly, is it about to pop? Well, the jury is still out on this one. In 2018, 2 years before ChatGPT took the world by storm, Google CEO Sundar Pichai famously claimed, AI is one of the most important things that humanity is working on. It's more profound than, electricity or fire. And it did seem that way for a while, when in just 5 days of its public launch, the language model that specializes in creating human-like conversations had over 5 million users. With big voices in Silicon Valley driving the hype, AI startups raised $23 billion in 2023 in the US alone. While tech giants like Microsoft and Google scramble to develop their own chatbots after ChatGPT's success, the wider discourse on the potential of generative AI remains highly polarized. Experts have raised concerns about the cost of developing AI while workers fear they might lose their jobs. And most of these concerns are not in vain. A report by Institute for Public Policy Research in March 2024 put the number of people losing their jobs to AI in the UK in the coming years to a staggering 8 million. Similarly, the huge cost of building AI, which has neither been recouped yet not justified by proportional leaps in product efficiency, is also drawing criticism from experts. The AI frenzy is driving the race for larger data centers, bigger servers, and more chips, which ultimately have disastrous impacts for the environment. Following these ethical and environmental concerns on the use of AI, many websites have started restricting their data to web crawlers. Web crawlers are automated bots that are used by generative AI companies like OpenAI to hunt for data from different websites across the internet. With the increasing restrictions on data through web protocols, AI companies are finding themselves in a bind. Large language models like ChatGPT are trained on huge chunks of publicly available text, images, and videos. A study published by Epoch AI in June claimed that most tech companies might run out of training data between 2026 and 2032. So concerns regarding the exorbitant operational cost of AI, its ethical dilemmas and environmental impacts, coupled with year-on-year increase in AI-related stock value, is what is behind these talks of a possible market bubble. Investors are becoming increasingly impatient as they wait for returns. As of now, the AI industry has nothing big to show in terms of revenues from their products. According to Sequoia Capital, it is going to be decades before the AI companies can earn back in revenue what they have invested in the AI related hardware. The report put the estimated profits per year to justify investment at a whopping $600 billion. Gartner, a technological research firm in the US, estimates that half the enterprises building language based generative AI models will abandon them due to costs and technical difficulties by 2028. Such reports certainly don't paint as optimistic a picture of generative AI's future as Silicon Valley would like. But a debate like this, that was clearly absent at the time of the dot-com bubble, has the potential to shift the focus from speculation-driven investment in AI startups to a deeper and more serious approach towards building technology that benefits humankind in the long run. A degree of skepticism to emerging technologies is always healthy on a societal level and makes room for experts to address issues on the get-go. Only time will tell if the tech giants stop to listen to the concerns associated with the AI race or carry on in the bubble. Let us know in the comments down below what you think about the future of AI.